Today we're going to look at the PPI data, look at tomorrow's CPI data, and then talk about what that might mean going forward for interest rates. All right, today's producer price index data on the month side, down 0.1% month over month. That is less than the revised 0.7 from last month. Year over year data, 2.6%, much lower than last month's 3.3%. In terms of the core, ex-food and energy, also down 0.1%. That is less than the revised up 0.7 from last month. The core year over year, 2.8%, a big drop from 3.7% a month ago. Ex-food and energy trade services up 0.3 year over year. Ex-food and energy trade services 2.8%. A big number in the headline was energy, down 0.4%. Now, that leads to tomorrow's number of the consumer price index. Remember, these numbers were big misses in terms of consensus. The consensus for tomorrow, CPI data, up 0.3 on the headline month over month, 2.9% on year over year. That's up 0.2 from last month. So that may be something that is a volatile figure. The core, again, up 0.3 and 3.1%. Why is this important? Well, with a Fed meeting coming up on September 16th and 17th, the announcement on the 17th, we're going to really start talking about interest rates and what we're moving. Wells Fargo came out with a note this morning. They see 5 25 basis point cuts through mid 2026. Think about that. That's between now and the midpoint of next year, 5 rate cuts. The great thing about the September Fed meeting is we're going to get a summary of economic projections. Why is that important? That's where the Fed members give their guidance for coming up, and they give guidance for GDP growth, unemployment, inflation, PCE. So all these data points, they'll give their guidance for where they see all these data points and interest rates going forward. So in the next week, in the next 7 days, we're going to get a bunch of information that's going to make it much clearer on how the Fed sees the economy. Tomorrow's CPI data will be very important, and then everything going forward.